Alright, so guys, Jeff here back again with another video. So today, you'll probably be seeing this video on Saturday, and I kind of want to talk about the whole recession that Elon Musk is talking about. So what I actually mean is over here, if you actually see, this was actually being tweeted out literally on the last day of 2021, when Elon Musk basically said, if history is any guide, not many will make it past the next recession. Someone asked, when do you think the next recession will be? Elon Musk said, predicting macroeconomics is challenging to say the least. My gut feel is maybe around spring or summer 2022, but not later than 2023. So basically, he's trying to tell us that in his own mindset, he feels that the recession is coming this year. So I'm just gonna be going on and on about the whole my thoughts around this entire thing. So if you want to, you can just just put it in the background, do whatever you want, and just put this audio on because I won't be doing anything else. Just so that you can just hear my thoughts about the whole entire recession thing. All right. So the things that Elon Musk basically thinks that a recession is coming. So personally, I feel that Elon Musk is a little bit bearish on the market, which I don't blame him. Okay. Personally, like I actually reiterated my stance before on the market. I don't think I'm super duper bullish on the market either. Even in the prediction video that I did in 2022, I said that the small caps company are basically going to be trending sideways throughout. So I don't think that the whole entire recession is going to be a impossibility, to say the least. So yeah, I feel that Elon Musk is more towards the bearish side of things. I would say that he's almost like 20%, like 80% bearish, and for myself, I am like 52% bullish, 48% bearish per se. So yeah, I think that right now, especially with all the new information that we have gotten ever since this tweet, I feel that I'm more and more inclined to think that the recession would be coming very, very soon. Of course, we are talking about the previous recession being the '08 financial crisis that I'm pretty sure a lot of us probably heard of but never really went through, because chances are, if you're listening to this, we probably never really get a full brunt of the entire '08 financial crisis, but we definitely heard stories of it or even did research on it, or at least myself. So I think that if we actually take into consideration for the so-called recession, some people actually would like to take the pandemic, aka the March of 2020, as a form of recession. But I personally feel that that's not exactly considered a recession, because markets were doing way better than before. With all the stimulus coming in, economy was doing great. Businesses were affected, inclusive of all the lockdowns and such, but a lot of other businesses were actually booming. If we actually take into macroeconomics, we take in the top 20 companies in the world, all of them are actually doing really well. Of course, I think that that's also a little bit unfair if you only take the top 20 companies. You also have to take all the other companies who are maybe not listed, companies who are kind of really affected during this pandemic, especially the hospitality side of things, the tourism side of things, the cyclical side of things. But if we're talking about a recession, I don't think 2020 was exactly the recession that we are actually thinking about or we actually went through. But I feel that we are actually we actually kind of need a recession in a sense. So what I mean by that is because usually we say a recession usually comes every 10 to 12 years. And since we expect the '08 as the first recession, we would think that the 2020 is automatically assumed as the next recession, which is why in 2018 and 2019, everyone was calling out for the next recession because it was about time. Okay, it was about time for the recession to come by. But because of that, basically everyone was just kind of fearful and everyone was worried that we're in a bubble. Michael Burry was tweeting a lot. I'm pretty sure of that. But then when 2020 came and the whole entire pandemic started, it basically set a whole new tone for the entire world, not just in US, not only in Singapore, not only in China. It was a global thing. Okay, everyone knew about COVID-19. and this became something that was so big. This event became so big that I'm almost certain that this will actually go down in the history books without doubt, because with technology only getting more advanced as we go along, of course, the kids who are being born in the whole 18, 19, 20, they probably do not know of the extent that this pandemic actually cost the entire economy. But yeah, basically what happened in 2020 was a lot of money was being pumped into the market. The economy was being hyped up to a certain level, and basically in 2020 we had one of the best years that that the entire market had. But let's not forget, because the things that all this were actually being created manually, aka fake money. I would like I wouldn't go as far as to call it fake money, but I would say yeah, this money were basically being pumped into the system artificially. Yeah, artificially is a better term for this. And because of that, we kind of have to pay the dues of it right now. Okay, which kind of brings us back to the entire FOMC meeting that we just had last week, where Jerome Powell basically opened up the possibility of us having a lot more rate hikes. Also opened up the possibility of us having 50 basis point increment in all these rate hikes if actually needed, due to the very overpowered and also tight labor market that we already have right now. And yeah, I mean, like, because of that, I think that Jerome Powell is also very, very bullish on the fact that the labor market is strong right now. So I don't really care how many times I raise the rates in order for me to actually lower down inflation. If it is what is needed to be done, we will do it. And that's kind of the tonality that he's doing. Just to give you guys a little bit context, right now it is the 28th of January at 2 a.m. As I'm recording this right now. And the market basically was open in green. We had like about a 90% green market at open, according to the heat map. But right now it's 2 a.m. and everything's down. Everything is kind of trending downwards. Let's see. SPY right now is only up by 0.1%. Nasdaq is up by 0.1%, and Dow Jones is up by like 0.1%. So I wouldn't really like to call it a green day, because they are basically kind of taking back all the gains that we actually got in the early hours of trading. But yeah, this is basically the context of it, and I think that right now people are basically still trying to weigh in what the Feds actually want to do with the entire economy. And yeah, let's just bring it back to the whole recession state of things, which is why I feel that, you know, when Elon Musk is talking about how a recession might be coming in 2022 and not later than 2023, that's the most important part. Like, I feel that this is very, very important, but not later than 2023. It simply means that he sees problem being solved by 2023. Aka supply chain issues, especially when we just had our Tesla earnings as well. And Tesla earnings, they also brought forth a very well, I would like to say expected issue, which would be supply chain issues. We already expected that for a lot of companies, a lot of industry, be it your EV companies, your battery companies. If it doesn't matter if it is like, as long as you have anything to do with materials and also labor, you are probably in need of these resources. And because of that, I think this issue is not gonna disappear anytime soon. And even Jerome Powell himself said so, that he don't think that these issues are going to be disappearing in 2022. He do see that these issues get softened in 2023. But of course, you know, we are not time travelers. We cannot really see the future on this. So right now, if I'm talking about the recession wise, I feel that if in March we suddenly see the Federal Reserve raise rates by 50 basis points, then I would actually move my bet over to a recession coming in this year. If we start hearing of a 50 basis point, I think the moment we hear anything along the line of a 50 basis point being certain, I think that's where we actually start to have the actual fear in the market for a recession. And the thing is that just having things sell off will not cause a recession. Um, like in the act of selling off is not really how the recession is going on. The process of recession is basically created because of all this selling of equity markets and bonds market and commodities market and such. And of course, there's another teetering issue, which would be the whole Ukraine and Russia situation. So, like for people who want to go into oil, or people who want to short the oil commodity, honestly speaking, because right now we do not know what to really expect from this entire so-called like imminent war that they are talking about. We are not sure either, and I'm not sure what kind of play I want to do with this, because if you want to short oil and if a war do break out, oil prices are going to go up, like without doubt. And if the Federal Reserve decides, okay, you know what, we're going to raise rates, oil prices are going to go down. So buying oil wouldn't really be the best idea for you to actually go buy. So like right now, I'm very confused with the market. Of course, again, to give you guys context, because it's 2 a.m., so I'm still looking at the market every single minute. I'm still looking at my graphs. I'm still trying to look for plays that I can do. But I'm not really doing as much day trading right now because I'm a little bit strapped for cash. So basically, I'm just looking at some positions that I can actually get into or actually get out of because right now I'm still quite heavy in the options. So if I can actually get out some of these options, then it will be great. But I'll see how it goes. Of course, in this market right now, nothing is certain. And yeah, I think recession as a whole, I think ultimately it would actually come down to, I don't really want to call it just the whole Federal Reserve FOMC kind of thing, because I feel that if we actually start being dependent on what Jerome Powell said, and whatever he says will dictate how the market moves, I think eventually that's not going to work out. But I think that inflation is definitely a very scary point for us to actually look into for this year. So yeah, like what I said, tomorrow we are going to be getting our PCE, our consumer spending report for December. Afterwards, we are going to be getting our CPI on the 10th. And if we do not see any sort of disinflationary trend on the January CPI report, I don't know, man. I feel that we're going to be having a very, very tough year. But of course, I don't want to keep on harping on it, but like we kind of expected it as well. We expected the market to not do as well in 2022. But do understand that at the same time, when I say that for the market to not do well in 2022, I still expect bigger companies to do well, because ultimately bigger companies, they are there because they actually give some sort of value back to the consumers, which is why I think, like for example, like Alphabet, they are going to be there. If we are talking about Apple, they're going to be there. Tesla, maybe. If anything, Elon Musk actually said something about Tesla, which was actually quite crazy, which is how he intends to complete the entire FSD by 2022. So that's going to be very, very bullish for us as an indicator for us to see. Because right now, there's no one who can compete with Tesla. Like right now, literally no one can compete with Tesla. You can call yourself an EV car, okay? There's like hundreds of EV companies right now. I don't even know anymore, but nobody is on the same level as Tesla for the FSD. And because of that, I think Tesla is going to be quite crazy, which is why I did predict that Tesla would go to a higher heights in 2022. And I still stand by it, even though right now it doesn't really seem exactly the best. Right now it's kind of hovering around the $858 mark. And of course, full transparency to you guys again, I do not hold any Tesla right now, but I'm telling you right now, okay, like I'm very, very interested in getting into Tesla. If I do see Tesla dip a little bit below $800, I think I would actually sell off some of my stocks just so I can get into Tesla. Like that's how committed I am to getting into Tesla, because the more I research about Tesla, the more bullish I am. But because I did a lot of trades on Tesla, and right now I kind of don't feel like getting back into Tesla yet. This is kind of like the problem with swing traders, day traders, is that we often have this emotional connection to the buying and selling price, even though those are just trades. It's very hard for us to actually put a price target in mind. But yeah, I mean, like Tesla, I'm very, very interested in Tesla. So definitely gonna be looking into how I can actually enter a position in Tesla. Hopefully, I can get in the 820, 810 region. I feel that if we don't really get in now, there is a chance that we might miss the boat. But at the same time, I feel that right now we're in this very, very weird market, and there is a good chance that we can actually get caught Tesla at $500 or even $600, $600 or even $500. Because let's be honest, if in March Jerome Powell just says, "All right, we're going to be raising interest rates, and it's going to be by 50 basis point," Tesla is going to go into 600. That's just it. Like the moment Jerome Powell said 50 basis point, we are seeing Apple at $130. If Jerome Powell said 50 basis point, we are seeing Microsoft back to like 250 and something ridiculous like that. So, but at a macro side of things, these companies will still succeed, like what I said before, about how they actually provide value to the consumer as a whole. Because think about it this way, I feel that, let's just say if we actually enter this sort of recession-esque environment, be it in US or just globally, but let's just say in the scenario that we do get into that, people are still going to be using their phone. Okay, people are still going to be using Apple, or they're going to be using their Android phones. Whatever it is, phones are not going away. So you can say people are losing jobs, but people are not. People are not throwing away their phones because they're getting a recession. Okay. Of course, they might not buy as many phones. I guess like they might not change their phone every single year or every single 2 years, but people will continue using Apple. Buying of products might not be as high, but the usage of it, the services of it, all these are still going to be quite high, in my opinion. I think EV wise, or just basically just the automobile side of things, that's going to be a bit tougher. But of course, that's kind of what Jerome Powell is intending to do, simply because right now inflation is currently being propped up by the higher prices of your used cars and trucks, and also new cars and trucks. And these are basically all these EV companies. They are unable to have the supply to actually feed the high demand for people who want all these cars and trucks, and because of that, they have to not buy the new ones, they have to go and buy the used ones, and either way, they are still they're inflating the prices of things in general, and then the CPI comes out to be bad. And so, if we actually increase the basis point of things, it's hopefully to dissuade people to spend as much money. That way, you can kind of lower inflation, and that's kind of what the Feds want. The Feds are not going to be bailing the market out. Like, no way. That's, like I said before, if you want to, you can actually go to the video where I actually explain what the Feds actually want. I think I uploaded that before the FOMC meeting. I explained that there's only three things the Feds want, which is max employment. They want low or moderate inflation, and also reasonable long-term interest rates. And yeah, bailing the stocks market out is not one of them. And yeah, because of that, I feel that for recession, yeah, I mean, I'm not super duper hopeful. That's why I feel that like right now, because I've been trading in the market for quite some time now, and it's almost like this feeling of jadedness where I just feel that like there's no hope for the market right now. Everything's just gonna go sideways trending, and just all gonna go to hell. So like right now, the SPY just went negative. The SPY is now negative 0.4%. Nasdaq is down 0.7%. So I'm not sure what's going on right now. Actually, I did see that Joe Biden was on a live stream on Fox, was it, or CNBC? Yeah, they were talking about the the Supreme Court, the Stephen Breyer retiring, and I think they were having some form of live stream talking about it. But I don't think those are catalysts that will be moving the market to this extent. So yeah, I think basically right now people are mostly kind of risk off in this market. They don't want to hold on to small caps. They don't want to hold on to momentum stock. They don't want to hold on to companies who are not profiting. They don't want to hold on to companies that do not have good forecasts, aka your small caps, which is why I said small caps are gonna sideways trade going towards zero, basically. Okay, like if the company that you're investing in right now do not at least have like 100, okay, maybe not 100, like if the company you're investing in right now do not at least have $50 billion market cap, it is okay. I want to say 50, maybe 20 billion, 20 billion and below is probably considered a small cap, a micro cap, and because of that, probably getting destroyed right now. Just look at Robinhood. Robinhood, let's see. Robinhood is $11.54 now. Okay. Palantir is at $12.41 now. Peloton at $24.09. SoFi down. SoFi just went below its floor pricing at $11.74. The floor pricing previously was at $11.90, and it just went down. So yeah, small caps definitely right now getting destroyed. Of course, right now I'm hedging against the market with a few puts, and I did talk about my puts before. And tomorrow, on Friday, I'll be also uploading my news and also the weekly trades. So you probably will be hearing about my trades as well. So yeah, I mean, like basically all these puts. Personally, like I told you guys before, I'm more bullish than bearish, and that's why I kind of don't want to buy so much puts to hedge against the market. I'm not happy per se to look at the market suffering, because I'm generally long on the market, and it's sad to see that my puts are the one that's really making the profit today. And even then, it's not that much profit because due to theta decay, and we started on a green market. Right now it's basically not a huge swing down, hence my puts are not really doing that well either. So basically I'm getting screwed on both sides. Okay, my longs are not doing well, my puts are not doing as well as I wish for. Not like the 1100 basis point drop on Tuesday. I think that was the crazy one. So but yeah, recession, I don't know. Basically, these are just like the thoughts that I have for recession. But yeah, I mean, like I would probably need to make a note to actually study some of the macroeconomic stuff that I actually talk about today as well. But yeah, anyway, I think I've drawn on long enough. Hopefully, you guys enjoy this video. After this, I actually have to record the metaverse coins that I already promised one of you guys who left a comment on my video asking me about the metaverse coins. I will be recording this video as well. Hopefully, this video should be out on Wednesday instead. You'll be hearing this video first, most likely, because I think, especially with how time sensitive this entire thing is right now, I think that this would be a good video for me to actually get out on Saturday. But yeah, anyway, thank you guys for watching, and I'll see you guys